Big powder beach under my feet, Scotland Road. And the beach keep cracking leaves like a daytime campfire burn. And the ship is off to sea, and the wicked is returned. Good morning, everybody. Happy Friday. Friday the 13th. Get started here in about 1 minute. It's the local school, no one knows where to find. And the river starts to roll inside the clouds of misty mountains. Water from their stone below becomes a blue-green fountain. As the southern wind sings again, and I love the vibe. You can tell right. Good morning. Happy Friday, everybody. Welcome to our live stream, live on Friday mornings. Happy to have everybody here. Wow, where do we start? Kind of understanding the market conditions as we get rolling out right now. One of the things that I use as a heads up, I'm kind of preparing to wait a little bit. We noticed the 10-year and 2-year yields have been moving up the last 3-4 days, just cranking to the upside. Okay, I noticed an hourly chart, but the direction of the 10-year and the 2-year yield and the pullback of the US dollar, something's not right. Okay, these are very highly correlated, and when they're not, something is kind of about to happen, whether it's news or economic events. And we don't have any more economic reports coming out other than Baker Hughes at 1 p.m. Eastern. Just notice popped up over here, calm before the storm. Okay, import inflation is low, but Trump tariffs pose fresh threats. Okay, so we're kind of getting a feel on the media that things are a little uncomfortable. Okay, prices have gone up. People are looking for a pullback. As far as the economic reports out there, things are pretty light. Okay. Let's see. There was a couple of other things that we keep close eye on, and Dow futures inch up after 6 straight losing session. Dollar has been on a roll and got another boost. Okay, so as we're watching the media, okay, always important to watch media because it helps us understand what the novice traders are doing, what the public's doing. Okay. Broadcom had a very good, had a good earnings session, and prices jumped up on that. Let me see if I can post that in there. That looks great, team. Okay, yeah, they gave us another suggestion on that. Okay. Okay, well, I'll deal with that in just a moment. So let's kind of look around at the markets, see what we have going on. Yesterday we did in the Discord room, we were talking about where Broadcom could go, and we did we looked at the overall structure in the buy territory. We had the resistance area where sellers were pushing price down for a couple of days, and then the buyers were certainly accumulating. We used on some of the swings that I have presented here, we used some Fibonacci projection levels, and we can see that we went all the way to the extreme up there about 206. Okay, so what I'm expecting today in the overall indexes, especially for the NQ, is we did make a new high, okay, in the overnight session on the NQ. But I'm looking at this gap up is it's going to kind of gap up and then pull back, okay? So in that mindset, we need to find a way to participate, okay? It's not just jump in. We got to have a setup that we're looking for. Before we get into the indexes, let's take a quick look at nat gas. Nat gas has been pulling back. It did hit that daily supply up here, okay? And I do want to point out, as far as what we do at the market institution, is that we're looking at a lot of price patterns, okay? And some of the price patterns that we have seen, okay, a lot of them are coming out where we have multiple touches of resistance over on the left and a low pivot point on the right. Okay, this can give us that move to the upside. Okay, so I'm going to use the strategy that we cover as far as open range breakout. We got that first 5-minute candle on that gas. Help us manage the risk. I'm going to look to go long at 3.40. And then we'll put on a trailing stop. We do have a demand zone just a little bit lower, 3.364, 3.343, okay? Crude oil for the open range breakout trade. Checking the daily ATR, we're right about the middle, okay? Now, what I mean by this, we take the Globex range, compare it to the daily ATR. If we're expecting more choppy, non-directional open on crude oil, especially for the open range breakout trade, we tend to compare. And if the Globex range is within about 40 to 70% of the daily ATR, very, very often price kind of chops around at the open, okay? The pit open, okay? The regular session doesn't open for another 24 minutes, and that's why we're doing a lot of our prep at this point, okay? So I'm going to hold off on taking a trade on the crude oil, even with the open range breakout, based on those conditions here, okay? Now we're going to cycle through a lot of different potential trade setups, okay? And all of it is based off a price pattern. It's not just trading one particular product, okay? There are days when the equity indexes are not really great to trade, and there are days when things are pretty excited to trade, okay? Right now in the pre-market, there's a lot of uncertainty, okay? As I pointed out earlier with the dollar and the yield, okay, and showing that pattern right there, dollar dropping while the yields are moving up. That's one of those signals that tells me to wait, okay? Kind of see how the market opens. Also notice the NYSE trend in the pre-market is about 1.7, which is bullish if the markets are dropping, okay? And the indexes are not dropping at this point, okay? So it's kind of we're looking at possibly another kind of squeeze to the upside, okay? All of these little pieces of information, I want to point out, they don't make a trade per se, but they tell us about the market environment. So if we're anticipating a squeeze to the upside on NYSE stocks, okay, in the pre-market, okay, we're using that information. We also see that the NASDAQ pre-market indicator gapping up. NASDAQ pre-market indicator, which is QMI, or I think, yeah, just QMI. Okay. It has a 92% correlation as to traders' sentiment at the open. Now the NASDAQ's pushing up, NASDAQ futures are pushing up, and traders' sentiment is more on the bullish side. Okay. Got it. Okay. But the NASDAQ exchange put this indicator together. Okay, to understand how to price and prepare for the pre-market, okay, or in the pre-market, how to prepare for session open. And right now, the sentiment is more bullish on the NASDAQ. On the NYSE, which would include the Dow 30 and the S&P 500, they're also looking more on the bullish side. We noticed that the trend, or sorry, the VIX, the pre-market volatility index, also gapping down about a little over 40 cents. Okay. So there's a lot of indication that there's complacency and no fear in the market. They just want the market to continue to go higher. Okay. But the information up above is showing that there's some cracks in it. Okay. Dollar pulling back while the yields are moving up. Okay. So we're just gathering that information here. Oh, we got that price drop into the demand zone. So let's cancel the open range breakout. Let's jump in on natural gas. And I typically have a 0.1 or 15 tick trailing stop on this, my maximum risk. Okay. So I stepped away from doing the open range breakout. We also note that the Globex range is about 50% of the daily ATR. Okay. Here we go. Now, target 3.498. And looks like my trailing stop's already adjusted up to break even. So a nice little bump right there. Now, keep in mind, with this type of a trailing stop and the personality of the nat gas symbol here, I'm going to come right back down here. I'm going to adjust this. It's what I'm noticing is the candles are kind of big, and what we noticed on nat gas is when it has a big red candle, a big green candle, we often see, or a move down in price, we often see that 50% retracement. Okay. So if I don't want to get stopped out, I'm going to move this back down just a little bit. Give myself a little more wiggle room on that. Okay. All right. So as far as a profit target on nat gas, we're looking for 3.498. Okay. And also based on just some simple mathematics, we got the base to the rally and we have the retest. So further move up, we see the statistics most often 85% of the time you'll get to that first target, and about 40% of the time you'll get to the second target. Okay. And all we're doing is just taking about 50% of this move up and applying it to this point where we entered the trade to give us a first target. As per the price chart, 3.498, where we have a little region, we have a leg base zone just above the Globex high. Okay. And we'll let that one play out as we get started. Need some attention on gold and silver. Okay. Gold, another significant drop down. Okay. Off the highs. Okay. So price is coming back down to the origin of this move up. I want to be prepared, either with, you got to properly size the trade yourself. Let's see. Hi, Matt. let's see, on NVIDIA daily charts, it seems to hit support 3 times, have a leg base, leg base. Okay, let's go check that out. Okay. I do want to point out gold approaching a demand zone 2672, 2656. Okay. And we also had in silver. Where's my silver chart? Yeah, silver's right on the zone now. So let's bring that one up and then we'll go check NVIDIA. Corn also coming in here. So a lot of price action, prices dropping back to find some demand. Let's see, we got silver, and I'm going to drop this down to a smaller time frame. Now I'm going to start off with the micros because silver is a big monster to trade. I mean, if you're trading the regular contract, it's $5,000 per $1 move. Okay, so the ticks are pretty big. The risk is big on it. Price pulling back into this first level of demand. We're in the buy territory. Okay. Since it's already in the zone, I'm going to take it if it leaves. Okay. And we do have an entry where we enter at the proximal line, or we enter in the zone, or we enter if price is leaving the zone. Okay. So we call them like number 1 entry, number 2, number 3. Okay. So at 3.98, and we'll go with the 5. I'm going to take 2 micros, and then I'll just use the low of the session as my protective stop once I am filled. Okay. As price starts to move back up on silver, okay, using the structure and pattern, we got point A, point B, and point C. Okay. And we'd be looking for target 1 and target 2. Okay, now big chance it's not going to get up that far today. Okay. If we do get our entry as price starts leaving that zone, okay, this is what we're going to shoot for. Okay. But this is a pretty sizable drop, 2.12%. It's down 66 cents. I mean, we've had a pretty big drop on this. Okay. As price starts to bounce up off a very big drop or rally, you have what is called like a dead cat bounce, or a yeah, basically they call it dead cat bounce. Okay. So those bounces can generally be about 23% of the move down. So a more conservative target, if we get filled on the entry, about 31.47. Looking for that bounce back up. Okay. All right. So let's jump out at NVIDIA, NVDA. Okay. Now, when we go look at stocks, okay, it's to understand that some stocks have a pretty big impact on how the NASDAQ futures move. Okay. For example, taking a look at the NASDAQ futures right here, we're up 145 points. Okay. These top stocks over here, these are the large market cap weighted stocks, part of the Magnificent Seven. Okay. But I got 8 of them in there because it makes the window look better. Okay. So these stocks, okay, move first, and then the exchange traded fund adjusts after that. Then the futures adjust. So understanding that futures are a derivative and they derive their price from something else. Okay. Well, what else? Okay. Well, the NASDAQ is a market capitalization weighted index. And what that simply means is the large market cap stocks move the index more than the smaller market cap stocks. These are some of the top 8 large market cap weighted stocks on the NASDAQ. So as we monitor them intraday, we can see if there's strength to the upside or if we're looking for a pullback, okay? The Qs also can act as an additional odds enhancer to help us manage risk, okay? And in watching the Qs open, we want to determine if we had a measuring gap, also classified as a runaway, or if it was a breakaway gap, okay? Now, the NASDAQ this morning had price consolidating sideways for a period of time. That is correlated with a measuring or runaway gap. Now, what we look for as far as a gap fill is on a runaway gap measuring, okay, is that price comes back down to fill the whole gap. If it turns out to be a breakaway gap, often there's a reverse leg base inside of that gap, and we look for an area inside the gap for the pullback, okay? Now, I'm not going to get too much into teaching right now, just kind of preparing that mindset. All right, I want to make sure that I'm getting back into nat gas. And we got stopped on my trailing stop, so I'm going to re-enter this one.
Order filled.
And I'm just going to put in my hard stop right around that 3.64. I'm not going to put on a trailing stop just yet, okay? Trailing stops in the pre-market can help you manage your risk a little bit better and what you're willing to risk on your trading plan, okay? All right, Russell's pretty quiet in the pre-market, gapping down about 3.8%. We do have a zone down below, but it was produced in the outside the regular trading hours. As we break down to a tick chart on the Russell, okay, this is one of those price patterns. We had the buy territory, okay. Notice where the multiple touches of resistance were in the low pivot. We often get that breakout and then price comes back down deeper into that zone area. So we're going to be watching closely to see if there's any buyers still left here on the Russell. And let's see a little higher time frame. Let's drop this down 5 minute. There we go. We got our zone right over here with the leg base group of candles. And it looks like the leg candle leaving is smaller, okay? Now that little level of detail, leg candle leaving the proximal line smaller than the leg candles in the zone, we often see that price does not go too deep into the zone. It can be like a proximal line entry, okay? So
Order filled.
we get filled on. Oh, we just got hit on our silver trade. Okay, price coming out. I'm come back in and I'm placing my protective stop. Always have stops on silver. Don't trade silver without a protective stop. It is just way too brutal. Okay. Okay, so our first target up here, 31.48. I'm just going to have to let this one work. Okay. Now I just traded some micros, so it's not a really big position. And simply because of the personality of the silver and what it pays out per point, is quite large. It's a higher risk trade, right? Right now, we have found some unfilled orders. What we're looking to see if there's enough unfilled orders to send price back to the upside, okay? Again, manage your risk accordingly. All right, S&P pulling back. Some things about the equity indexes before we get jumping in. S&P and the Dow are very highly correlated indexes. All the Dow 30 stocks trade on the S&P 500. So again, very highly correlated to Dow futures compared to S&P future, okay? So in the pre-market, we look at the number of Dow stocks that are greater than 94 cents positive and the number that are greater than 94 cents negative. We net the result. So we got 2 negative and we're looking at 6 positive. So we net the results, that gives us 4 positive, okay? Now, 4 times 2 would equal 8, okay? So what we're looking at this for is to get a value of cash and compare it to where the futures are trading, okay? Now, this may sound confusing, but futures go trade at a premium and they also trade at a discount. So I want to know if futures are trading at a discount or whether they're trading at a premium right now, okay? So if cash equals 8 and futures are trading at 12, then S&P futures would be overbought relative to cash. They're trading at a premium. Also note, where price is still inside the prior session's range, okay? Very often, high percentage of the time, when price opens inside the prior session's range, we have to anticipate the high probability of a gap fill, okay? Versus whether price is opening outside the prior session's range or inside, we make that assessment. The NASDAQ is outside day, okay, outside the prior session. When it opens outside, there can be that gap and run. And you can see where the prior session closed way down below. Chances of a gap fill are less on the NQ this morning, okay? All right, so we got Dow also pulling back, almost flat on the session. Let's look at a tick chart. Dow along with the Russell. Russell looked like a decent little trade, but I'm going to give it another couple of minutes here for the market to open. I notice that IWM is down just a little bit, which is the exchange traded fund for Russell, okay? Crude oil moving up a little bit. Still anticipating this to be kind of choppy as the session starts. Nat gas, going to look to participate in that as well. But I'm going to give it just a couple more minutes for the session open. Okay. Gold. As we look at the exchange traded funds, you can see that SPY gapping up in the pre-market about $1.79. And we see that price broke away, so kind of a breakaway gap. You can't see it on the price chart yet. You'll see it in about 3 minutes. Okay. Diamonds also gapping up, but very little. Okay. Along with the IWM. So in the last several sessions, we've noticed IWM and the diamonds or Russell and the Dow not taking on the same price movement as the SPYs and the Q. Okay. So this also leads into some information. Okay. The number of stocks on the S&P 500 currently inside prior session, sorry. Well, that's not what I wanted to show. Oh, the number of the stocks on the S&P 500 are falling, okay, has surpassed the number that are rising for 9 straight sessions. So basically what this is telling us is the S&P 500 index is moving higher on lighter and lighter volume, okay? Now, if those large market cap weighted stocks are the whole strength of that, okay, once they start to show some weakness, we may see the index start to correct, okay? But we've only got a very few stocks that are pushing these indexes higher. And that's what happens with a market cap weighted index, okay? The Dow is the only price weighted index. And that's why we're not seeing a lot of the correlation between the S&P and the NASDAQ, okay? All right, session's just about to open. We're up slightly on the silver, okay? Not big, okay? Some of our other prep trades, corn is closed. We'll be opening up again in just a moment. There we go. Got the session open. But we're on the waiting side, okay? We're not just jumping in front of things. Okay, we got let's see, we got gold right at that level. Now, if gold drops, we might see a little pressure on silver. Okay. Gold tends to lead. The other thing that I want to point out is the 5, 10, and 30-year bonds and notes have been pulling back, looking for buyers. Okay. So as the 10-year and the 2-year yield continue to move up, we're going to see that the 5, 10, 30-year bonds and notes continue to move lower. Okay. This will also impact the FX futures as they will pull back with the bonds as the bonds and notes. Okay. Unless the dollar starts doing some crazy things. Okay. What we pointed out earlier was the dollar was dropping while the yields were moving up. Okay. So that told us to just kind of wait for the market to open, not to trade the indexes right at the start. Okay. So we're correlating a lot of information here to tell us whether we need to be waiting or whether we should jump in to take a trade. Today, as we start this session, I have the December contract with 217,000 contracts traded. And right now we have the March contract with about 116. So we're about 50% right there, a little better than 50%. Now what this means, we're contract rollover, okay? So Thursday and Friday this week is when we start to see that shift in contracts moving from the front month to the back month. Monday should be on and trading the March contract, okay, because you're getting close to the last trade date, which is next week. Okay. Let me see here. Hi, Sean. Well, good question. And Sean's asking, are we expecting a sell-off on the equity indexes being so close to expiration? Okay. During contract rollover, there's a lot of, I mean, the big banks and institutions have to roll from the front month to the back month as well. Okay. But this contract rollover also has some other elements that are coming out next week. like an FOMC meeting, okay, where we just saw Switzerland, what was it, yesterday, gave a 50 basis point rate cut. Now, I don't know what the Fed's going to do. The Fed's already off because typically during an election year, the Fed doesn't touch the rates because it influences who can be president or not. Every president knows this, and or every candidate, so they use the markets to kind of manipulate the behavior patterns. Okay. Now I'm not looking for a sell-off because of just the expiration. Okay. We are looking for, and what we've noticed over the years is that starting about 5 days before an FOMC announcement, the indexes tend to rise about 3.5%, 4%. They run up, kind of buy the rumor, sell the news. Okay. So I'm not looking per se for a sell-off, okay, because of the FOMC meeting coming out next week, announcement on Wednesday. Okay. Also, if you have this time of year, if you go to Stock Traders Almanac, you will notice in Stock Traders Almanac, this time of year, the new one comes out. So you put it on your Christmas wish list. Okay. And I don't get any kickback for that. So I just want to put that out there. But the Stock Traders Almanac also says the Monday before options expiration is typically an up day. Okay. So statistics prove that greater than 72% of the time that the Monday before options expiration is an up day. Okay. So if we're anticipating an up day on, or price moving up into the FOMC meeting, we're going to look for opportunities to go long with that because that's what we statistically have seen over the years. Whoa, Russell got a little volatility right here. But great questions. Crude oil. That gas just got me a couple of times today. Okay. All right. So here comes crude oil. I'm sorry, gold. We're not anticipating on this particular entry for price to go deeper into the zone. Okay. I'm looking for price to change right about that 26.72. Okay. But notice the volume is very thin, and you should be trading a February contract on gold at this point, not the December. I'm just going to put an alert right here. Let us know when price hits that. Okay. All right. QQQs smoking to the upside at the moment. SPY, nice little breakaway gap. Notice that we had the reverse leg base. Price pulled back within the gap and changed directions. Okay. That happens a lot on the breakaway gaps. And here again, we have price breaking away. And we'll look for that reverse leg base, I'm going to anticipate it somewhere right around in this range. Okay. Just looking around. Well, a little slippage on the Russell. Dow. Oh, based on the information we shared with the dollar and the yield, boy, the yields are shooting up pretty good. And the dollar with it, okay? So should be sending the bonds down. Got the 30-year approaching demand. Now this becomes like a perfect storm. If the yields are moving up to supply and the notes and bonds are moving down to demand, once they connect, we should have a change in the market conditions, okay? And also with the bonds and notes going down, we should pay attention to the FX products, okay? You can also see that silver going a little deeper into that zone as gold is still pulling back to find the buyers. Wow. So just as a reminder, okay, and 30 minutes ago when we started this, one of the first things that we looked at was we want to find out if we should be waiting or jumping in the market, okay? We looked at the dollar and the yields. We saw that things were not correlated the way they normally are, okay? Especially in the overnight and pre-market. Dollar was going down and the yields were going up. That little piece of information we can document and verify to help us anticipate to sit on our hands a little bit longer before jumping into the market, okay? And that's kind of what we're doing right now. And you're noticing the price patterns really choppy, not giving us really any great direction, okay? So again, we're dropping down to smaller time frames to see if there's a place to get in. What we've already documented is there's an opportunity to take a short trade once price gets back up to supply. And there's an opportunity to go long if price comes down to demand. In the middle, there's a potential breakout trade, okay? For those that have attended our Mastering the Charts part 2, okay? I want to point out some of these price patterns, okay? We have multiple touches of resistance on the left and a low pivot point on the right, and we're making a higher low, okay? So what this does is it shows a specific price pattern. And I lost the chart I wanted to demo. I did a lot of work on a couple of charts last night just to show those accumulations of orders. But we'll come back and look at those things a little bit later. You got another one, huh? What was that on, Matt? What product? NVIDIA? Seeing this oh, on SPY. Okay. Yeah, we got the Qs. Notice a reverse leg base group of candles right here. So as far as waiting to go long again on, we need a price to pull back, okay? Wow, look at this thing smoke to the upside. So we're at all-time highs. I'm anticipating price to get this squeeze out of the way and then pull back. So different techniques can help you anticipate where that turning point is using Fibonacci price extension tools. We'll look for where we have a confluence level. Okay. So give me just a second. I'll set that up. And we need to use 3 different swings in price, all with the Fibonacci price extensions going to the upside. Okay. And I'm going to use these last 3 swings in the overnight session. I'm going to look for, wow, we got a huge confluence we just hit. Okay. And we have another level right up on top. Okay. Now, these are not generally levels to take, well, they're not at all levels to take a trade long or short. They're just giving us an idea where the Fibonacci price extensions are. Okay. So since price has gone through this one, I'm going to anticipate that price will change direction. Right around this 21,920, 21,934. We're getting really close to the 22,000. Okay. Okay, so we're still watching the S&P. NQ just ripping. Now, when you see price moving this fast and this aggressive up, there's not a lot of volume involved in that. Okay. Big price moves on very light volume often get retraced. Okay. On the daily chart, we have Fibonacci projections 22,087 up to 22,510. Okay. So I didn't have a place to get in and I just don't click the button. I look for a demand zone to enter the trade. And it looks like our Russell is not going in the same direction. Dow getting a lot of whipsaw. And S&P approaching the resistance. Okay. That gas took out our zone. Still waiting. Placing an order to come back in on the silver. If we get a good solid bounce out of here, I'm going to look for that first target about 31.44. Oh, thanks for that, Mark. Or Matt, excuse me. All right, so we had silver come back into the zone. We're still waiting on gold. Still seeing a Swiss franc pull back. Bonds and notes also pulling back. And just double check on the dollar and the yield, they're still moving up. Okay. S&P right, S&P futures right near the all-time highs again. NASDAQ is just not looking back. Let's take a look at this. Okay, so here's our setup on the 30-year. And it looks like we still have a gap to fill. Now, notice on this picture here that price based sideways for a period of time and then gapped up. Okay. This is what we call that measuring or runaway gap. Okay. Very often the orders that initiated that gap. So gaps are a result of the largest imbalance of buy orders over sell orders when it gaps up. Okay. So what we're anticipating is that there's leftover unfilled orders right down in this area. Okay. So we're looking to see if there is, then we will. Okay. So as we're anticipating price pulling back to our level here, 116, 1932nd, I'm going to put an alert on that just so that when it hits, I'm ready to participate in that trade. Okay. And it appears that the 10-year and the 5-year have a little bit further to go. Okay. All right. So now it looks like the market, as it popped up and the NQ is, starting to look like it's going to roll over. Monitor how the structure is. If you keep making a higher high but not a lower low on this, chances are this is a trap for the breakout traders. Price will drop just a little bit and then shoot right back to the upside. Okay. Again, we're just waiting here. That gas pulling back pretty sharply. There's our corn. Yeah, corn's not pulling back yet either. Got the Japanese yen and Swiss franc, gold, silver. You have a demand zone on Russell, 2376, 2371. Let's pull that up. Russell is trading more. Yeah, we're still watching the December contract. Look at that. Pulled in the traders that want to go short. Pulled them in and watch them push price right up to that next level. Now, taking a quick look over at the top NASDAQ market cap weighted stocks. We're seeing the last 5 minutes, we're getting a little pullback on Broadcom, pullback on the Apple. NVIDIA is moving up, pullback on Microsoft, Meta. We're starting to get, as you're watching the stocks here, you're also noticing that the exchange traded fund is also basing out. Okay. Look at that. Finding the buyers, Still pushing price up. Let's get one more squeeze to the upside. And you can start to see Meta's bouncing. NVIDIA pushing up. Okay. See, the nice thing about trading futures is futures always follow something. They never lead, okay? So you can use the underlying asset or the physical market in futures. You can anticipate how the futures are going to move, okay, by using the physical market and watching how it's playing out. Now, with equity index futures, okay, they're the right to buy something in the future, okay? So by watching the stocks, if all the stocks are selling off or all the stocks are rallying, you're going to see that the Qs will respectively do that, the same thing, okay? Because Qs are a derivative of a group of stocks, NASDAQ 100, okay? Futures price is adjusted up or down by a computer. No market makers, no specialists, okay? It's just the Globex computer adjusts the price up or down, okay? So I know this is a trap. I'm having a hard time with the equity indexes trying to pick a direction. Yeah, the volume is getting heavier on the H contract. But for this session, we'll continue to watch. All right, a little high. Yeah, that would be a light volume price move up, okay? See these big sweeping moves? And if you come over and look at the volume in that area, look how light that volume is. Okay. Now we're about 4 minutes away from the top of the hour. In trading equity index futures, we often see some higher activity around the quarter hours, especially when prices are arriving in a supply zone or arriving in a demand zone. Okay. If it arrives on time, we tend to have a more favorable trade outcome. If it arrives earlier than the quarter hour, price often goes through the zone, okay? Now, all these things that I'm mentioning are things that you can look at and verify, document, okay? And as you document them, and you start to change your belief system, okay? As the belief system verifies information, then you can start to incorporate it into a trading plan, okay? One of the pieces that we touched on, and I'm going to come back to it again here, is that we touched on verifying the information about the dollar index and the 10 and 2-year yield. Okay. Dollar was going down until session open, while the 10-year and the 2-year yield were going up, telling us to wait. Okay. Hold off. Don't try to chase this. Don't try to jump into the market. Okay. Just let the market settle out. On inside days also with the S&P, okay, and the other equity indexes, while they're inside the prior day's trading range, taking breakout trade entries is very high risk. Should wait for price to pull back into a demand zone or into a supply zone for higher safety, okay? So there's a lot of things that we measure, and on our website, we do have some short 90-minute, sometimes they're 1-part, 2-part course little lessons on the pre-market prep that we do where we explain every detail of why are we using a Globex high and low? Why do we use a prior session's close? When do we expect the gap fill? Okay, what kind of market conditions do we normally have when we're inside the prior day's trading range versus outside? Okay. All right, let's do an assessment here. Right now we have 4 Dow stocks up over 94 cents and 1, 2, 3, 4, 5, 6, 5 now. So we have one negative. So right now, S&P futures should cash equals -2, and S&P futures are trading at +16. So what that would mean to me is that S&P futures are 18 points overbought relative to the cash market. In an overbought situation, we are looking for price to go up into a supply zone for an opportunity to take a trade short. Okay. Now, we do have an area here on the price chart on S&P where price has based for a while. Okay. We may have an opportunity for a breakout trade as long as we're making a lower high before price hits that area. Let's take this trade down to the buyers. So we're going to take a short at 73. My stop loss will come back up here about 78, which we're at. So as I'm using this price pattern, I see the multiple touches of the support. At the market institution, it's, well, how we define resistance and support is minimum of 3 touches. Okay. Minimum. See, when you start looking at where you have what's really going on, okay, is that we have more sell tickets than buy tickets at each one of these price points. There's no magic in that. It's just that there's more sell tickets than buy tickets. That's it. Okay. As price sheet touches a support area, the more times it touches support or resistance, the more orders are being filled. We anticipate a breakout many times on the 4th time. Okay. So in this example, down below, we have sellers pushing price down at these levels here as resistance. Okay. On the other side of that, we had buyers pushing price up. This is the battle, okay, between the sellers and buyers. As price returns to the origin of that move back up in a buy territory, we anticipate there to be some leftover unfilled buy orders. Okay. So we use these pictures on the price chart to anticipate where the sellers are, where the buyers are. Okay. Once price leaves that area, and of course, there's an opportunity to take a breakout trade if you have that enough information. For example, up on top, I have enough information that says most of those orders have been filled at this resistance, and I can look to take a breakout above 6,084 with the potential of supply zone just up above at 6,095. Okay. These pictures on the price chart show us where we have accumulation of orders, whether they're sell orders or buy orders. Okay. And they're not made by novice traders, they're made more by the banks and institutions. Okay. Now, I did a lot of work on one chart and I just can't seem to find it now.
Order filled.
Okay, our corn trade is working. Now comes the waiting. So where we have a trading opportunity, now breakout trade, oh, I just violated one of my rules. Breakout trades on an inside day, that's why this thing is taking so long. Got it. I did a slop shot. It should be waiting for price to come to demand, okay? You notice the SPY over here, SPY is also pulling back. And we're looking for that reverse leg base, leg base. I'm gonna guess it's down there about 605. As long as the SPY is coming down, then I don't have anything to worry about with my S&P futures. Okay. Futures follow the cash market. Okay. Something else outside the price chart is the NYSE tick. Okay. As long as the tick is moving or below zero, there's more downticks and upticks on the NYSE, the New York Stock Exchange. Okay. If it starts getting back above zero, there's going to be more upticks than downticks. Okay. Or more upticks imply a little more buying, and downticks do imply selling. Okay. With futures, there's a lot of things outside the price chart that we have to monitor. Okay. And breakout trades often fail on when we're inside the prior day's trading range. And kind of caught myself because I'm trying to force trying to put on a trade. Okay. So I'm going to bring my risk down. Now I realize I violated one of my trading rules here. I'm going to adjust my stop loss down to about that 74 area. And not risk as much. We did on the NASDAQ. And NASDAQ hasn't really built an accumulation of sell orders yet. It down made it down to that demand. All right, so S&P futures are inside the prior day's trading range. They haven't broken. Okay. Now we're also anticipating that there are some leftover buy orders down at 6,064, 6,061. Okay. We want to watch what time price arrives at that level. If it arrives earlier than the quarter hour, when we've got about 6 minutes before the quarter hour, okay? And it is arriving there earlier, okay? The SPY also hitting that reverse fib area. So I'm going to wait just a little longer to go long, but I've hit one of my profit targets here. Where I was going with that is that if price hits a demand zone or supply zone earlier than the quarter hour, it often goes through that level. Okay. Now, we should see some unfilled orders, and when using the leg base group of candles, about 87% of the time, you'll get a one-to-one bounce off of it before going through it. Okay, so I'm gonna grab my profit.
Order filled.
Not gonna jump in long. Okay, because price arrived at that zone early. Okay. So I am anticipating price will get a small bounce and then continue on lower. Now, if you're prepared for those little bounces, then you can sit in the trade and um, and be okay with it, as long as you have enough cushion on it and it fits within your trading plan. Okay. Again, a nice bounce. There were, see that reverse leg base worked well on the SPY over here. And this is why we always want to be monitoring the equity index futures, or sorry, the exchange traded funds, the ETFs. Okay, because they do have a high impact on the equity index futures. IWM diamonds going lower. S&P is really confused because of what's going on here with the NQ. Very high probability price will fill the gap when opening inside the prior session's range. Okay. So the gap fill is down a little bit lower on the S&P. And we need to look down in that area. Let's just double check it right here. And let's see if there's a leg base group of candles in there. We got a big one, a proximal line entry. Hopefully it didn't hit it already. Nope, a little bit lower. That would fill the gap. And we'd be looking at a proximal line entry. Okay, back out to the 20-minute. So we're looking to take a long trade, roughly about that 6,062 on the S&P. Cash value, we have 6 Dow stocks, 7 Dow stocks up over 94 cents, and 1, 2, 3, 4, 5. One positive. Now we're still overbought. S&P futures relative to cash. All right, I'm always looking in the wrong direction. Look at that. Came right down to that overnight zone. Great entry on that. Anybody get the Dow trade? Yeah, that was a great entry. Might get a second shot of that if the S&P pulls back. Again, note the time that the price arrived. Yeah, it was on time. On the quarter hour. So I'm going to use this. We'll be monitoring the Dow here as the S&P hopefully provides us an entry. Nice bounce on the S&P though. See, what you just witnessed is a picture of where there's leftover unfilled orders. You had resistance. You had our buy territory. Okay. We have the structure within that, gives us some clues. Okay. And then we have the leg base group of candles. Or a zone. Okay. I do want to keep a reminder to everybody that I will be doing a class on Monday, kind of midday. We'll announce it in our Discord room, and we'll announce it to anybody that's in our database. We're going to be doing a class, kind of a short showcase class, showing you a little bit more in depth of why we choose the entries that we do, talking about our leg base group of candles, and give you a little more background on how all that is put together. Okay. So just watch for the announcement and learn a little bit more about why we use all these areas. Because we always know that somebody with a lot more money up here was selling, somebody with a lot more money was buying. Okay. And all the price chart represents is where those buyers and sellers were taking action. Okay. We use the patterns and structures along with the leg base group of candles to anticipate where the possibility is of there's leftover orders. Okay. Are you using a 15-minute chart for the open range? Oh, no, we're already way past that. All right. NASDAQ still continuing to move up. Russell coming down. Yes. Right back to a leg base. Up, silver going deeper in the zone. Still waiting for gold. I'm just hanging out there. Russell hitting our larger time frame demand zone at 2376. I missed that. It's not a zone. Not a zone. Looks like NQ is going to continue to move up just a little bit more. This is not an easy environment. What you might pay close attention to is your trading plan. Okay. Now we do have several students and several people out here that are looking to get qualified for their prop trading firms. Okay. And what normally happens is people take on such a large position that you blow things up real quick. Okay. Now, in many of the prop accounts, you have a certain dollar amount and you have a trailing drawdown. Okay. So you're paying really close attention to that trailing drawdown, what you have to work with. It's not that you have a big account size, it's set trailing drawdown. It is a real big caveat there. So you need to have your trade plan in place, and the trade plan should incorporate what it is you're willing to risk on a trade. Okay. So when you start recognizing how much you're willing to risk on a trade, you need to size your position according to your trading plan. Not take on too much because you just want to capture a strong move in price and kind of get the thrill of the ride. Okay. If you're trading long or short, you need to know what your maximum drawdown is. Okay. And we are anticipating the S&P to come and break this level, keep going to the downside. And that's what we're starting to do. Okay. SPY. There we go. So on our higher time frame, we're looking at a proximal line entry right near the Globex low. Okay. We're anticipating that price should arrive in this demand zone in about the next 10 minutes. If it gets there early, chances are it's not going to provide the trade opportunity that we're looking for. Okay. So what we want to look for is our futures oversold at this point, dropping into a demand zone. We also anticipate the gap fill with a high probability on an inside day. Have 1, 2, 3, 4, 5 Dow stocks negative, and we got 5 positive. So right now, futures and cash, or so cash equals 0, and futures are trading at +4. Futures are overbought relative to cash. Okay. We need futures to be oversold relative to cash. Will do. Thank you. Now, if you want to learn more about supply and demand zones and trading, there's information that we're putting out there on our website. You can dig around. There's a lot of things on YouTube where we've described them before. Take a look. See if this trading style is for you. And if you want to be notified when we're doing live streams and things like that, you can monitor the Discord room, or you can monitor our website and or register on the website and get an email notifying you. We're still 8 minutes away from price coming into that level. So I'm going to set this trade up there just ahead of time, anticipating the bounce right around that 10:30 Eastern time. Okay. We look at all of this information as a forward-looking technique. Okay. And it's always important to know where and you're going to anticipate price to change direction and have very specific plan. Okay, so I'm gonna come down here right about 6,060. Yep, overbought and oversold can become more overbought and oversold. Absolutely. Okay. But with futures, having a cash market to compare, and this is why, when traders look at like an open range breakout trade, or they look at like crude oil and natural gas. The pit open at 9 a.m. Okay. Well, the pit's the physical market. Overnight session futures can be trading at a premium or trading at a discount. But once that pit opens up, they like to balance out. Okay. So I use the Dow 30 stocks as that odds enhancer. The Dow is a price weighted index. And because everything has like an equal weight in the Dow 30, it allows me to kind of use this stocks over 94 cents or below 94 cents, netting the results, comparing that to S&P and the Dow futures to see if futures are trading at the premium or trading at a discount. In order to go long, we want the futures to be trading at a discount so that we get them a good bounce. Okay. If futures and cash are even, okay, then there's not much of a bounce. Okay. So all of these things that we're documenting here, for me as a trader, I need very specific information that I can validate over time. Okay. And over time, we have validated quite a few times that if price, like on the S&P futures, price is inside the prior day's trading range, okay, that the gap fills. And I would say above 85% of the time. If price breaks out of the prior session's high or low, but opens the session, regular session opens inside the range, it does fill a large percentage of the time, but not as much as if we have it as an inside day. Okay. Now, again, information shared right here does not make the trade. What makes the trade is having a very specific area where you anticipate the imbalance of orders to come into play. Okay. I'm just kind of waiting here. Now, the larger time frame trends, even on a daily chart, we're consolidating sideways. We are nowhere in a downtrend. Okay. So pulling back into demand, we want to see if there's any buyers that are going to push price back up. Okay. And that's all we're doing right here. See, the daily chart, we still are forecasting on the S&P 61.42 and 61.73 as price moves to the upside. Okay. For the NASDAQ, I still have forecasting up 22,087, 22,510. So how do you get into that trade? To the long side? Well, you buy the dip. Well, yeah, everybody knows you buy the dip. Okay. But where is the dip? Yeah, that's always the challenge. Uh-oh. All right. Price has hit our proximal line of our zone that we had posted. Okay, a little earlier than the quarter hour, earlier than the top or bottom of the hour. Okay. So what this tells me is that this is going to be higher risk. Over time, you start to see when price arrives in these demand zones and in the supply zones on the quarter hour, arrives on time. Okay. We get a stronger reaction. Okay. And a little more follow through. The fact that it arrived early is causing me just to wait a little bit longer and possibly look for some confirmation of the move. Okay. Now, with the leg-based group of candles, we anticipate that there will be some unfilled orders around these levels. Okay. What remains to be seen is there enough unfilled orders to change the trend or buy the dip? Okay. If you're using any type of like volume profile or anything like that, you might look at the prior session's range and see if there's a large accumulation of orders right near the session close. Okay. Yep. I'm just still waiting down below. Okay. Let's see if we get a little reaction at the 10:30. And we'll see if price is gonna go all the way back up. Okay. In Q. We're just looks like they're trying to make a little support. S&P is holding this level. I need to go just a little bit deeper, fill that gap. Gap fill color. Either a lot of ways to watch price action, okay? I've been in this industry for a lot of years, okay, and watched and spent a lot of time in front of the charts. For my style of trading, I like a forward-looking technique where I can anticipate where price will have some leftover unfilled orders. And in doing that, I like to look at charts that have already played out, okay? So let's do this on just a quick example, okay? When you start looking at any chart, okay, I'm just going to use, let's just try Apple, right? And I'm going to drop down to a small time frame so we can. When you look at charts, every trader trades based off of price patterns, okay? They have emotions attached to it. So one of the things that you can do as a new trader is start to look at the left-hand side of the chart and say, where do I desire to go long? I said, man, that would have been a great entry to buy here and go up. Well, how would you have planned to go long at that point? Well, information is over on the left-hand side of the chart. Banks and institutions always plan ahead of time. Okay, they never get all of their orders filled at the same time when they're processing them. Okay, there's just too many orders and there's not enough shares or contracts or lots at the same price. So over on the left-hand side of the chart, in a place I desired to go long, I want to look for a very specific group of candles, which we use as the leg base. Okay. So I have that group of candles, and a leg candle is just simply a body greater than 50% of the range, and a base candle, body less than 50%. Okay. The combination of candles seems to always be present where I desire to take a trade. So you can go back any charts, okay, and start looking at where you desire to go long and where you desire to go short for a trade. And often looking over to the left-hand side of the chart, you will find that group of candles. For example, this is a nice move up, and it doesn't matter the time frame, okay? If I desire to get in a trade here, I would look left. Is there something that's commonly there? You have to adjust the time frame up or down. So let's just try going up. Okay, there again, adjust the time frame just a little bit. And that group of candles is right there. That group of candles helps me assess the risk. And we see that where we desire to enter a trade long or short, that group of candles was present. That range helps us identify the risk on the trade. Okay. Notice on the S&P, we're not getting a strong bounce off of here either. Okay. Price looking to fill that gap. Once we have that gap fill, then we'll look for that move up. Okay. And we also need stocks to start increasing. You're starting to see the Dow 30 stocks. We now have 8 Dow stocks positive over 94 cents and 1, 2, 3, 4, 5 negative. Okay, that leaves us with 3 positive. Multiply that by 2. We get a cash value of positive 6. Okay. So if futures drop down and fill the gap and prices remain the same, futures will be oversold relative to cash, trading at a discount. Okay. Futures trading at a discount, we want to look for the bargain and opportunity to be a buyer along with the banks and institutions, okay? All right, that concludes our live trading room today, okay? I'm gonna go hang out in the Discord room and kind of look for some trades that I can participate in. And hope you guys have a wonderful Friday, a good weekend, and look for some announcements. I'll do a little showcase of what the lake base is and a little more description. I'll do that on Monday and give you guys an idea of what we're looking at. Okay. So everybody have a good weekend. Thanks for your time and thanks everybody for popping in. Have a great day. Thanks, team.